Okay. Hi, everyone. Welcome to the Phillip Trading Podcast. I will be your host for today, Yong Xuan. And with me here today, we have Jose Bosco, the principal of Strategic Private Limited. Hi, Jose. How are you doing today?
Hello, pleasure to be here. Thank you so much for having me, Chan.
Yeah, no problem. And it was very great to having you here. So for today's podcast will be a review for the upcoming webinar, which will be on the 27th of September, Wednesday, from 7:30 p.m. to 9 p.m. by Jose Bosco with the topic of factors shaping the US dollar index strength in the coming months. So if you are interested to join the webinar, feel free to register. So for our topic of discussion for this podcast will be on the US dollar index and its relevance across the trading styles and to explore the significant influence of the US dollar index. So how are the traders and the investors can leverage it in their strategies, and also to provide insights in what can one anticipate when using the USDX. So for this podcast will be aired on the next Monday, which is 25th of September. So we value your support and encourage you to share this podcast in the upcoming webinar with your friends to help us reach a wider audience and also to continue deliver high quality content. So without further ado, let's get started with our discussion on USDX. So my first question to you, Jose, can you explain the significance of the USDX in the global financial markets?
So yes, I will actually use one word to explain it. And of course, later I'll give a bit more detail, but the one word I'm going to use is the same word I used last year in December when I had the opportunity to be interviewed by your team as well. And we talked about the importance of the US dollar, how powerful this market is. And I ended up calling the US dollar the Lao Pan, the boss. So why did I call the US dollar the Lao Pan, and what's its relevance? Well, this has a lot to do with the fact that 80% of transactions worldwide, no matter what, it could be just money transfer between people, or it could be just the purchase of commodities like oil or gold, it could be the trading of stocks, etc., etc. 80% of those transactions utilize the US dollar as a currency. Therefore, changes of valuation on the currency itself changes everything. Think about it, like, let's say, for example, during the prior years, there've been a lot of quantitative easing, right, which is printing of the currency by the central bank of the US. So that devalues the dollar. It makes the dollars weaker. So what happens? Well, then you need more dollars to buy whatever you want to buy. Therefore, the price of things go up. Why did the prices of things go up? Well, it may or may not be because those things were of a high quality product, maybe a good stock, a good company, or maybe it's because the dollar became weaker. So understanding the dollar is extremely relevant. That's why I call it the Lao Pan.
Okay, good. Yeah, the Lao Pan. So, is there specific market conditions or economic events that tend to have a stronger impact on the USDX?
Yes, definitely. Very, very good question. So it's all about money flows, right? So because we are dealing with a currency, so really it's all about where is the currency going and why. So for example, since the last year, the key word out there is inflation, right? So the price of things are becoming more expensive. So what are the central banks and the governments trying to do? Well, they are raising interest rates. And in order to, in exchange for raising interest rates, their intention is that people will consume less because it's more expensive to borrow money. And with less consumption, prices will go back to normal, and therefore will go back from inflation to less inflation. That's the intention, right? So again, think about what I just said. If central banks increase interest rates, next thing you know, maybe you had ringgit, for example, that you were not planning to use, but next thing you now know that if you were to convert ringgit into dollars, you will now collect a great interest rate for those dollars because interest rates have been risen. So in other words, now next thing you know, you have a lot of money flow because interest rates have been risen. You have a lot of money flow coming from other currencies into US dollar. This is just one example. So yes, going back to your question, there are multiple forces out there that impact the valuation of the dollar. Interest rates is the big one in the past year or two because of inflation and changes of interest rates, but also there are more. Like, if we go back in time and just a few years ago, where interest rates in the US were close to zero for many years. So then, you could think of unemployment numbers, you could think of GDP numbers, any number that represents the health of an economy will attract foreign investors to convert their currencies into US dollars, and therefore increase the value of the dollar because of demand, or decrease the value of the dollar because of supply. So yeah, so unemployment number, GDP, inflation, interest rates, those are the four key big elements I would like to mention as an answer to your question.
Okay, yeah, you did. So I think inflation, those are the main thing that usually will affect a lot of the stocks index and the financial markets. Okay, so my third questions, what are some of the common strategies that traders and investors use to leverage the USDX in their decision-making processes?
So the US dollar, it's such a fantastic market to trade, to use in many different ways. So you are asking about different strategies. To be honest, there are many, but I'll group them in. At first, I will group them in two groups at first, and then I'll dive deeper into subcategories, right? So the first category would be just speculation, right? So the dollar, like any other market, is something that moves. So you got people that have their trading methods or investment methods by which they understand that this is the time to get in long, this is the time to get in short, and you can trade US dollar futures in the ICE exchange, for example. You can do so many things, and you can certainly expose yourself to those products and do well as a trader. So that's definitely something very smart that we professionals do, and certainly everybody should be looking at the Lao Pan, as I said, right? Anyway, going back to your question, so the other group of type of strategies is what I would call hedging. So let's say you have a portfolio of stocks in the local markets in Malaysia or any other market, no matter the country, no matter the currency. Let's say you have a portfolio of stocks. Well, of course, if the dollar index changes its value, your portfolio of stocks will also change value, no matter the country, no matter the currency, because of what we said before. So in other words, a great idea could be to have some of your positions in dollar against your main portfolio to act as a hedge. So if things don't go according to plan, at least you have an offset that alleviates the problem in your portfolio, thanks to using the dollar index as a hedge. So that's another way on how to utilize the dollar, which is very smart. And then if we think about those two groups, which is the trader, the investors, the speculators, all that group, right, that they are looking at the dollar actively, and then you have the hedgers, which are just thinking of risk. So if you look at that, in between there are many cases. Like, for example, I'll mention one more case just to open everybody's mind to things that we'll talk about in the webinar next week. For example, let's say you are not even a trader, you're a market analyst, and the only thing you want to do is to analyze the markets and understand what's happening. Well, in my analysis, I never only look at the markets I want to trade. I always also combine my analysis with the dollar, because you could find extremely powerful correlations and confluences. Example, let's say a stock market hits a support, and now as a technical analyst, for example, you think the market is going to bounce back up because of the support price, and at the same time the dollar is hitting a resistance, right? So if that's happening at the same time, this is a super powerful market correlation or market confluence, I should say, where the dollar hitting resistance make the dollar likely going to fall, and if the dollar falls, the stocks are likely going to rally, because you will need more dollars to buy the stocks. So the stocks hitting support and the dollar hitting resistance, or vice versa, this type of market scenarios increases the odds of trading whatever you trade. And we could apply the same rationale to commodities like crude oil, gold, you name it, including treasuries, bonds, and everything else, because in the end, everything is priced in dollar. That's the beauty of the dollar. That's why, again, they call it the Lao Pan. It's a very powerful market, even if you don't trade it, to at least use it in your analysis.
Okay. Yeah. So you mentioned on like gold, crude oil. So my next question also slightly related. So how does the USDX relate to other currency pairs and commodities like gold and crude oil? Yeah.
Yeah. So typically, and the key word here is typically, because I'm going to talk about correlations, and correlations are not a certainty. Correlations are not something that happen all the time exactly and precisely, because then that would be magical. So so that's why I'm going to use the word typically, right? So typically, any product which is priced in US dollars will have a negative correlation, or another way to say that is move in the opposite direction as the dollar. For example, if you trade stocks in the US market, and let's say you buy shares of NVIDIA, for example, to pick a stock. So NVIDIA shares are priced in US dollars. So if the US dollar goes up, then NVIDIA will tend to go down. Why? Because the dollar being stronger, with less dollars, you can buy the same thing, the same share. So the price of the share will tend to go down because the dollar is becoming stronger, or vice versa. If the dollar is becoming weaker, NVIDIA is likely going to rise in price because the dollar is weaker, you need more dollars to buy the same shares. So the same rationale applies to crude oil. Crude oil futures, for example, it could be Brent oil, it could be WTI oil, no matter which oil, it could be palm oil in the Bursa Malaysia. It doesn't matter what, those markets are priced in a currency. So then if the currency is the US dollar, you typically have this inverse correlation, whereas if the dollar goes up, the commodity goes down. Same applies for metals like gold, etc., etc. Because again, it doesn't matter what they are. What matters is that they are priced using that currency. So that creates that effect of typical negative correlation. But again, I'm using the word typical again because it's not always exactly the case, right? Because there are other aspects. For example, a moment ago, I mentioned palm oil in Bursa Malaysia, for example, just to pick an alternative market that trades with ringgit. So then here you have a double effect. You have the effect of the dollar on the ringgit and the effect of the ringgit on the palm oil. So sometimes you have markets where you have multiple levels of correlations, and that generates a little bit of a more complex scenario. And then often maybe you measure correlations, and maybe correlation is there 80% of the time, 70% of the time, instead of 100% of the time. But typically, as a rule of thumb, this is how I think about it, that normally a product priced in US dollars will tend to move in the opposite direction as the US dollar. This is the rule of thumb.
Okay, great. So that'll be all for the questions. So thank you, Jose, and also our audience for listening to our podcast. So we hope that Jose sharing on his insights on the USDX has been very helpful to our listeners. So if you are interested to join his webinar on coming Wednesday on the 27th at 7:30 p.m., feel free to register now. So if any of our audience members have any further questions or queries regarding on the USDX, please do not hesitate to reach out to us through our Facebook page or any other relevant channels. So we are very happy to assist you with any questions or concerns you may have. So once again, thank you for tuning into our podcast, and I wish all of you a successful week of trading ahead. Thank you, Jose, and thank you, everyone.
Thank you so much. See you all next week.